All right. Good morning, good peoples. It is Sunday morning in the U.S. for the most part. Depends on which coast you're on, what time it is. I'm still in Asia, but that doesn't matter. Um, let's get return of capital explained and why I decided to do this. I've been asked a few times, and then for purposes, I'm doing my own taxes now. So I'm out looking up the forms and getting all familiar with it. I knew how it works tax wise. And again, everything I'm going to talk about is US tax law. Again, I'm not an expert. Always ask your accountant or tax professional, but I can at least give you guidelines of what you're going to hear for the most part. Again, I'm not a tax professional, but this stuff, I wouldn't say it isn't rocket science. It can be complicated at times, as all US tax can be. All right, let's jump in here. So I know at times this confuses a lot of people. I'll be honest, and I thought I knew how it worked. Learned one little wrinkle today that I didn't really think about. All right. So let's jump in here. I'll give you a caveat right up to start. If your investments in a yield max, a curve, we can go through all the funds, right? There are a lot of them out there. Neos, um, Defiance, Roundhill, on and on and on. Okay. I had some in Roundhill. I had some in several, a lot for a while in Coney and Misty and um, Yeomax. So I used an example. I always think when you tell somebody how something works, you can talk about it abstractly, but if you give them something they're likely to look at, they'll understand it better. So let's go through it. So what does return of capital mean? Well, it means a few different things based on investment. But let's talk about high yield income or an income fund. So, return of capital, this is right out of Wikipedia, is a payment that an investor receives as a portion of their original investment, and that is not considered income or capital gains from the investment. Ah, ta da. Note that a return of capital reduces, I'm going to explain this more in a minute, reduces an investor's adjusted cost basis. Talk about how, what that means and how that takes place. Once the stock's adjusted cost basis has been reduced to zero, this was the wrinkle that I learned. Any subsequent return will be taxable as a capital gain. Okay. So it's not just, taxed as something else. And if you're collecting it during the year, it's going to be a short term. So, as a reminder, for those of you when we get into the capital gain, again, US tax law. If you're Canadian, Australian, many other places, UK, don't know, right? I haven't done taxes in those countries for many, many years, so I can't speak to it. I'm sure there's some similarities, but saying that means nothing really. You talk to your tax professional in those countries. All right. So I'll get into this in a minute. Let's jump into an example. So I went out to Yomax, which I've already done for mine tax. So you will see these forms known as 19A-1 notices. And if you go out and meander around the website on Yieldmax, you'll lead to, if you have questions on tax or something, click here. And when you go there, literally, there's probably multiple ways to get there. You have all of your 19A-1 notices for every month they were paying. Now, when they're into some weekly pays, then the weekly stuff. And I don't know because I haven't tried to look at them. Also, you, for your tax purposes, will use your 1099 from your brokerage. They will have already done this kind of stuff because the individual retail firm will let them know how much is ROC, return of capital, and how much is just ordinary dividend. And remember, most all of these are not qualified distributions or qualified dividends. Again, a lot of times we use these same words: dividend, distribution, interest. All of those things are taxed for the most part as ordinary income. Okay, what does that mean? That means, you know, Bruce is a IT guy and he makes 150,000 a year and that's his only job. He doesn't have a YouTube income, he doesn't have anything else, blah blah blah. So I have that kind of a taxable income. Do I have a home mortgage? Do I have other issues, right? And I go through and I do my taxes. And then anything I earn in interest, anything I earned in dividends, it's not in the category of I love qualified dividends, okay? These do not. I don't know of any of these high yield income funds. I was in PBR, an oil company out of Brazil, and those were qualified, right? There's some additional rules for qualified that you have to own it for a period of time and not trade in and out and write options against it and some of those things, okay? But I don't want to confuse you all, but there's a lot of things. If I just give you a simple definition of return of capital and read you the Wikipedia, do you really know what that's telling you? I'm trying to give you a real world and practical application for some of this stuff. So, the big caveat, let me say one more thing. If you're operating out of a Roth or a 401k, in other words, a non taxable as you go fund, right, or account, then what I'm saying doesn't mean a whole lot, right? It's not relevant. I say that at the end again. But if you are, like in my case, I have a 401k, I have a IRA, I have several things. There's nothing more than a 401k rolled over to be an IRA. I have a few IRAs throughout my career. So, in those, when you have income, you don't pay taxes each year. Now, I'm in a situation where my age dictates that I have an RMD. So, this year, I'm taking RMD. But even though I'm not making a lot of money in a career that I used to, I still can contribute to my IRA. So this year, in order to reduce some of my tax, I contribute the maximum that I can contribute. So, that being said differently, let's get into some more here. So, I went to the Ilmax website. I just picked AMC. Okay. I don't think I owned any AMC during the year. Okay. But I want to walk you through what it looks like. I probably should have picked Coney or Misty. But again, I depend on my 1099 and you should too, right? From your brokerage. But if you want to understand, oh my gosh, Bruce, I thought I was going to have 120,000 in dividend income and I'm only showing about 55. I'm super happy. What's that 65 that's ROC? So that's why we're having this conversation. What does that really mean? What's it got you down the line? All right. So back to what we were talking about. So this comes, whoops, this is a document that you can find out on Yielmax, and you get there through different ways, as I said. So these are the 2024, and I picked AMZ, and let me open this now. The reason they're not going to the end of the year because they're on a fiscal year. All right. So this is the form that my sheet is built on. I just wanted to show you that it exists. You can go out and find it, play my video, figure out if you didn't understand everything. So I'm going to go now, move this off because I've already built it here. So what they're saying on 1 month, right? Now, because why does it not just summarize it for all? Well, that's not how they work. They go along and they, being Yieldmax, makes the determination on how much ROC and how much regular, et cetera, that they're going to break it up. And so overall, I'm somewhere around 50% ROC and 50% taxable income in my taxable account that I care about, right? And my IRA and 401k, I don't really care. Although I have to take an RMD, if you don't know what an RMD is, don't worry about it. But if you're older, you'll get there. Okay. So let's take this particular situation. So AMSI for September the 9th, right? And you can go find it, paid 65. Normally you just look, myself, some other YouTuber, whatever you did, you said, hey, they paid 65.61 cents, right? Almost 66 cents. So, what is the breakdown? Because each month the breakdown varies, right? So, your 1099 should summarize all of your funds all together. All the IRS cares is how much is your normal dividend distribution and how much is your ROC. And then I'll talk to you what you're going to do with that ROC and whether it ends up being applicable in 2024 or not. All right. So out of the 65 cents, this one is 90%, right? This particular payment, return of capital. And what I will say to you is these 19A1 notices are usually estimates. But by now, I would figure these are pretty accurate, but you have to have your 1099 from your broker to get your actual, right? I didn't bother adding all mine up. I just perused out there and said, oh, okay, I got it all on my 1099. And boy, is there a lot of detail in that now from your brokerage with these high income, high yield funds. So 59 of the 65 cents is ROC and only 6 cents, right? Current distribution, payable date. And then this tells you percent of current. So a little under 10% is ordinary income, right? Remember that interest, that dividends, not qualified. Qualified dividends have their own special way. And they like you can literally pay no tax on them up to certain thresholds. So those are wonderful ways to get it, but you're not getting the big high yields like this. All of these big high yields are not qualified income. I wish they were, but they're not. Then you wouldn't even have to worry about whether you're in a taxable or a non-taxable. All right. So this gets into what is the year. Well, we don't care because we're just trying to do one sample. But you could go all the way to the October payment and see what the year is. Because look at that. This is saying cumulative distribution for the fiscal year to date. Okay. They're saying 34% is return of capital. But here you are with the single payment at 90%. So maybe there's another payment that return of capital is only 20%. I didn't go through them all. It doesn't really matter, right? Your 1099 is going to reflect all this, but you want to understand what's it talking about? What's the difference? Again, 401k, Roth, all that stuff, tax deferred account, you do not care about return of capital. That you're not even filing a tax return relative to that kind of an account until you start to do RMDs, okay, which is like 73 and up. You can't, and now the difference is if you go borrow from your account or you get into something like that, you still don't do these calculations, but you pay penalties and you pay interest for taking out early. I never did, never had to, never wanted to. So I'm no expert in that. But I've read. Okay. So what would happen? Let's say this is all I did was all I had was 3,000 shares of AMC and I went through and I collected the money all year. And let's just say this is accurate. Okay. It's 3411. Now they're saying cumulative distributions is 722. So I made up a scenario down here that's slightly different, easier number for math. Okay. So your 1099 brokerage is the ultimate data to be used for your taxes, not these 191As. But they shouldn't be far off from that when you go back and add all this stuff up to see what the end result is. All right. So let's say I collected $11 per share in AMC distributions in my tax year 2024. It probably didn't pay that much because here they're saying about 9, but for practical purposes, it could have been Coney, it could have been somebody else. Okay, so I had 3,000 shares, owned it all year long. Say I bought it in early January, and I collected all the distribution. So I collected $11 per share. Okay, on 3,000 shares. So that's 33,000, okay, that I collected in total income. Now, the fear would be, oh my gosh, man, I didn't do my quarterly estimated payments and I'm going to owe a bunch of tax and all that. And you would, right? When you go out and whatever your ordinary income is, even if it's Social Security, you can push your Social Security and you're retired into being more taxable. I really hope Trump comes through with this thing on not having it taxed at all, but that won't be till the year 2025 if he pushes that through like he's saying. But on the 33,000, that's what I normally would get a statement, the $11 to 33,000, it's all considered dividend income, same as interest and other categories, all taxable. What's my tax rate? Well, what did I have all together? I had Social Security and I had this. Well, this would kick into my Social Security for sure and cause some of the Social Security, which normally, if that's all you have, it wouldn't be taxed. All right. So let's take their 3411 estimate, right? It, your 1099 is going to have what the real number is. Then in that case, 375 is excluded from being taxed if you did not sell your shares in 2024. And let me walk you through that. So you're basically paying, right? I didn't use this number, they did. My numbers are looking more like 50-50. They're terrific in some of these, okay? So they're saying ROC is 375 a share and taxable is 7. So if this was my scenario, I would have $21,743.70 as dividend income, not qualified, ordinary dividend income, right? So that if I'm in a 18-20% tax bracket, right? I'm gonna owe 4,000 for 4,100, $4,200 on that money and up if I'm in higher income brackets, okay? But I did shield $3. I did shield 11,000. Well, in a 20% tax bracket, what do you think 11,000 is? You guessed it, it's 2,200. Is that right? Yeah, 10% would be 1,100, 20% would be 2,200, $2,250. Okay, so I got that shielded. Well, what do you mean shielded, Bruce? Okay, where it just moves it into a different bucket and ultimately you pay the piper. However, all dividend income is considered to be taxed fully of the portion that's dividend income, right? So we said ROC takes out 11. So this 21 doesn't come in. It adds to my other income and I come up with an income number, all my deductions, mortgage, whatever I have, and whatever I'm in at a tax rate, as I said, I just made up 20%. Then that's how much this is going to cost me, right? This is going to cost me 43,400, okay, for this amount at 20%. And I shielded 2,200, 2250, right? $2,250 I shielded. Okay. So let's walk through. So in this example, I made it up. I said my average cost across all 3,000 shares. Let's say I bought them all at once or I bought them in 3 buckets once a week. Okay. I got to 2150. So 3,000 shares at 2150. So my purchase was $64,500. You with me? Right. Okay. If you did not sell in the tax year, there's nothing to do regarding the lowered cost till you sell the share. When sold, you simply subtract from your 2150 cost the amount received in total ROC value. That's what I did. I went up and figured out one share. So it's $3.75 a share because I simply took my ROC amount and divided it by 3,000. So I then, okay, have a tax basis cost instead of being 2150 is 1775. Now, if I sold during the tax year, say right going into the end of the year, I said I'm going to sell AMC, right? It was great collecting all that money, but I'm going to sell it. So if I sell it and I did not hold it 12 months or longer, 12 months is the magic long-term capital gain. I'm still going to have to make it 1775. Okay. So let's say in 2025, you sold your shares for $23. Say it was January, February of now 2025. Okay. So what is your long-term capital gain? Well, it's $23. That's your sell price. Normally you would subtract 21.50, so you made $1.50 a share. Now you're making 525. You're making that 150 plus 375. Okay. But since you held for 12 months more, capital gains are substantially long-term capital gains are taxed at a lower rate. I think it's like 60% instead of 100%. If don't get confused about there's two categories of capital gains. Capital gains means I bought something and I sold it. I bought it for $5 and I sold it for 10. So I had a $5 capital gain, basically double my money. If I did that within a 12-month period and didn't go a calendar year in time, then I'm taxed at a capital gain, which is treated like ordinary income. It just goes into that bucket. But the minute I hold something for 12 months and a day, then I'm in a long term capital gain. But this is where this comes back. Now, you could keep on holding this for year after year after year after year. But this is a little caveat I learned at the beginning. The other important note to heed is that when you have received a dollar amount in ROC, return of capital, calculated amount that is equal to the entire purchase price, then you have no ability to lower your cost basis because you've already lowered it with all the other ROC amounts. So let's say that you're then 2 years into AMSI and you're in year three and you're collecting these payments. You paid 2150 and you took 11, and then by the second year you would only be able to take 1050, right, to lower that down to zero. And then and then what do you do when it's lowered to zero? You take it as a capital gain, which is really like saying you take it as ordinary income because it is just a capital gain. All right, guys. So again, this is all mute, not applicable if you're in a Roth or an IRA or some other form of non-taxed retirement account. Okay? Hopefully this helped you. Um, don't trust the 19A1 notices. They're estimates and they say estimates. Now, usually they refine them toward the end of the year and they're pretty accurate. Trust your 1099. All right, guys, hopefully this was useful. It was the appropriate time. Like I said, I just finished doing all of my taxes and I was very pleasantly surprised. I contributed max to one of my IRAs just to to be able to take that off to offset the massive amount of income that I was expecting to fall into ordinary dividend income. And I was lucky I saw it at around 50% on the ROC, and I was like, yeehaw. Okay, guys, again, this is Bruce with Targeted Wealth Creation. I'm not a tax accountant or a tax professional. Always seek your tax professional. I'm not a financial advisor. Okay, I'm not a professional financial advisor. always seek help with making investment decisions. All right, guys, have a great one. Talk to you later. Bye for now.